Hi everyone and welcome to Wall Street Multimedia's Market Watch. I'm Tiffany Lu, bringing you the latest market news. Asian markets were mixed on Monday as the yuan steadied. Both the Shanghai Composite and the Shenzhen Composite gained 0.7% as government funds continue to stabilize the market. U.S. stocks ended Monday slightly higher as positive housing data outweighed poor New York area manufacturing data. The Dow closed almost 68 points higher for its third straight day of gains. Trading was light with volume about 20% below the monthly average. On Tuesday, China's stocks tumbled despite signs of a housing recovery and the PBOC's latest attempts to support the market. The Shanghai Composite fell 6.2%, which is 27% off its June peak. And the smaller Shenzhen Composite fell 6.6%. U.S. stocks traded flat on Tuesday morning, alternating between small gains and small losses on mixed quarterly results and a positive housing report. Now let's turn to Matthew Cheslock to see what he has to say about the U.S. stock market's recent performance, major market movers, and China's recent currency devaluation. So we've seen a lot of sideways trade lately. How long do you think this will go on for, and could word from the Fed on Wednesday help break the market out of this?
Well, I'm not sure anything from the Fed this week will do anything. I think it more has to do with September, and a lot of that's going to be based on the employment number that we see the beginning of September after Labor Day, that type time frame. So if the market can stay stable where it is right now with all that's going on and all the uncertainty, it's a pretty good thing. And then maybe we can find a reason to take it higher. And it might not just be the Fed. It's going to be other things, maybe oil rebounding, maybe currency devaluation, and the China stabilization of their market will also impact what this market does.
We're approaching the end of earnings season. Considering that, what are the biggest market movers at the moment?
Well, technology has acted pretty well considering, but it's mainly large cap stocks have performed very well, and that's where the money's being plowed into right now. So I would focus on that at least until the Fed makes their announcement at the end of, or the middle of September, and consensus is it's about 50-50 still. They're not really sure what they're going to do. So right now I think the market is in pretty much neutral, and unfortunately as a trader, we want to see that volatility, and I'm not sure we're going to get it for the next month.
Do you think the U.S. market is going to feel ripple effects from China's currency devaluation and its recent stock decline?
Well, it's funny. Today we're not. We saw one of the biggest declines in, the indexes in China that we've seen in a long time, and it hasn't spilled over to Europe or the U.S. So that's interesting. We have felt it last week. We saw a massive move lower. We saw a lot of concerns were brought out, but we are not seeing that today. So I wonder if some of that's been played out already, and we expect the Chinese government to stay supportive of, supply in their market.
That's it for this episode. I'm Tiffany Lu, and thanks for watching Market Watch. I'll see you again next time.